Great. All right, good. We'll start again. So welcome to the panel on rebuilding trust in DeFi. I think we would like to touch on at least 2 or 3 topics. One is the question around, protocols have performed quite well versus centralized players. However, we know that centralized players are really critical for trust and scale. So we will touch on that briefly during our talk. Then, of course, the question is what kind of infrastructure still is required in order to truly scale digital assets and digital financial assets. I'd like to hear from the panelists because you all interact with very large, well-established firms in finance and regulation, and of course with state actors. So I think it'd be interesting to get that perspective. And then lastly, I would like to speak with the panelists on the topic of innovation and failure and stability, right? We are innovating here, and there is failure when you innovate. And in financial environments and financial systems, preferably, there's not too much failure, because then the trust is gone for a very long time. So this is a really big challenge, I think, for our firms and for any actor that is in this space. So why don't we start with a brief introduction? Maybe I'll have Mr. Yamaoka start, and then Ken, and then I think Soulbis already introduced themselves, so I think that would be great.
Thank you very much. So yeah, my name is Hiromi Yamaoka. Do you see my slide from your side? Is that okay?
Yes, we do.
Okay, great. Thank you very much. I'll make a presentation. My name is Hiromi Yamaoka, and I'm now chairing the Digital Currency Forum in Japan, which consists of around 100 leading company in Japan. And we are trying to promote the digital currency platform entitled as DCJPY. And in the DCJPY, digital currency is expected to be issued by commercial banks. And our effort is trying to strike the appropriate balance between centralization and decentralization, and trying to maintain the benefit in the modern monetary system, because the modern monetary system consists of a market economy, which is quite important to promote the economic development, and also the democratic society, and people's free liberal economic activity is guaranteed by the decentralized system and market economy. And then we are facing global challenges, including the ESG and SDG, or the innovation and the blockchain or AI or many other digital technologies. We try to make full use of those technologies in order to overcome global challenges. That's our task. So we try to create the 2-tiered digital currency platform entitled as DCJPY. And this DCJPY is yen-denominated digital currency, and at initial stage issued mainly by the private banks. And we try to maintain the appropriate balance between the centralization and decentralization, because our DCJPY is issued mainly by private banks. So the private banks already have a credibility from the general public. At the same time, DCJPY offered the blockchain-based technology for the digital technology. So banks can update their deposit in order to incorporate the high-end technology, including the blockchain and DLP, in order to facilitate the transaction of tokenized digital asset or other innovative asset. At the same time, we try to maintain the 2-tier structure of the modern monetary system in order to facilitate the transaction and maintain the stability. And I believe that the DCJPY has many benefits, because the DCJPY value is stable. At the same time, we can reduce the cost accompanied to the cash transaction. And we can maintain the private-led financial intermediation led by private banks. And we can avoid digital bank run. Of course, if we issue the CBDC, we have to worry about the digital bank run, in which, for example, in an emergency situation, people may prefer central bank liabilities rather than commercial bank liabilities. So there's a risk of digital bank run but in a DCJPR framework, since the digital currency will be issued by private banks as a private bank liabilities in a DCJPR scheme, we can avoid the digital bank run. And we can use the existing framework of bank regulation and deposit insurance. And at the same time, we can foster the private-led innovation led by the private entities, including commercial banks and commercial entities. And in sum, we are trying to create a good digital currency platform which can strike the appropriate balance between centralization and decentralization by making full use of the existing big players like commercial banks. And at the same time, we can promote the innovation using the high-end technology like blockchain or DLT in order to facilitate the innovative transactions. Thank you very much.
Thank you. Thank you, Yamaoka-san. So maybe Ken, it would be interesting to hear about your experience. And I mean, I was, and your exposure in the space. Yeah, and then I think you have Yamaoka-san has opened already so many critical topics to talk about. So this will be very exciting.
Yeah. So can you hear me?
Yes.
And can you see the screen in the first screen mode?
Yes.
Okay. So in this session, let me first introduce myself and make some brief kind of observation of the current status. But it is only my views and not necessarily the normal research. But first of all, let me explain the NRI itself. Since it has the numeric name, most people in Western markets still feels like it's a part of the numerous securities. It was, but it was NRI itself has established in 1965 as a spun-off of the research consulting and computer systems of the numerous securities. But since then, it grows the businesses and listed on the Tokyo Exchange in 2001. So it is now an independent company. It's more like a consultancy and IT solutions companies globally. And myself act as the researcher, provides some participation to the international forum. For example, I participating in the Asia Pacific Finance Forum, which is the sub-working groups of the APEC Business Advisory, and generate some white paper on the wholesale CDBC. And actually, I'm still working on the drafting the principles for the wholesale CDBC to be reported to the finance ministers this summer. And as an NRI capacity, I myself wrote about some articles. For example, this is a stablecoin volatility and regulation. And with BGIN, I cooperate with the Yuyama-san, Tomo, and Paul Brickner to write about the proposal of principles of DeFi disclosure and regulation. Tomo is a primary editor, and I'm cooperating with that. And with that, my observation of the current status on this stablecoin, it is very different from the so-called Western markets. About to say in common law jurisdictions in the States or Singapore or some other parts, most of the so-called stablecoins issuers do businesses in the permissions or public distributed ledger, to my knowledge, and which is not to be allowed to be handled as a business in Japan, which is the continental law or the civil law jurisdiction, because it is you have to have the legal system written and this defined prior to do business with such instrument. However, because it is the legal kind of regulation were very detailed in written in the order, it might very quick in the implementation because it's very clear. And right now, as Yamaoka-san said, and correct me if I'm interpreted wrongly, there's a initiative utilizing the bank deposit and in the digital age, and also with the changes, revised Payment Service Act, which enables decoupling of the issuers and bookkeeping functions of the so-called stablecoin, and it is actually digital money type of the instruments. There are some discussion, not only the permission to distribute ledgers, but also enhance kind of explore to apply to the stablecoin and the permissionless or public digital ledger. No, and also not only JPY denominated, but also some foreign currency denomination like US dollars. That this permissionless and foreign currency may open the market, not only the Japanese consumer, but also the foreign consumer that might want to purchase the assets. If the counterparty's jurisdiction allows to accept such coins. But unlike the Western market stable coins, the structure of the backing assets is very different. As far as I understand, most of the stable coins in the Western market is primarily backed by fixed income securities, more than 50%, 75% sometimes. However, in the Japanese case, regulator assumes that 100% of the backing asset should be the bank deposit. So it's like a tokenized deposit in some sense. And because of that, and also in the case of the JPY denominated instrument, as you know, the short-term interest rate is deadly low. So compare to the business model in the Western, for example, US dollar market, there are some reserve income from the management of the underlying asset. And then the issuers may want to share some income with the intermediaries who conducts KYC or some other bookkeeping functions. However, since issuers may not be able to expect such income from the underlying assets, which is bank deposit, short-term or deposits, there are the kind of on the reverse flow of the income from the intermediaries or bookkeepers. So how bookkeepers earn kind of income from the businesses. And by looking at this slide on the right-hand side, there's some similar positioning of the funds transfer service providers businesses, which is having the bank. It's not bank as backing asset, but it is the asset itself. But have the similar situation. There's no income from the backing type of the asset. So what they are doing is either in the cross-border transfer, it's very simple, set commissions and excess spreads. But for in the case of the domestic or PSP type of businesses in Europe, there are similarity of the card networks like merchant commissions. But in addition to that, there are used for the marketing strategy using the private points. It's like a mileages in the world, but such points are kind of like a sort of the bonus. So it does expire. So it's not a currency, but it can be used only to the designated merchants or designated instruments. And the very kind of lightly regulated, since it is not a financial instrument, but can be used by some financial instruments or it's like mutual funds, for example. So the word or smartphones. Within the smartphones or his accounts, there's money and points. So money is universal, but points is kind of like creating some economic zones to the some kind of the marketing platform. Hence, the last slides could be in the future. In his world, there will be some multiple slots in addition to the points and money, like a stable coin for the digital asset or digital native asset, and perhaps the CBDC. So people might want to use such multiple slots to the asset or to the services they want to purchase since we can observe similar thing when you travel abroad outside of the Eurozone. You might want to have the multiple notes on the currencies, and you can select what type of the instrument to pay regarding to the counterparty's acceptance, such like that. So that's one scenario could be those things. So I'll back to you. Thank you. Great,
thank you. Excellent. So, okay, so now we're fully in the discussion on the enabling factors for trust here in decentralized systems. So, I think you both so far laid out some really critical points. What would now be interested to ask the Soulbis team is, I mean, you mentioned some of the clients that you had and some of the interactions that you have with both obviously institutional issuers as well as projects that are issuing. So when we look at issuances from it would be interesting to hear your take on what you see, how these issuers, both institutional, but also some of these projects, think about the backing of these issuances. Let's talk about potentially money or money-like instruments, right, that travel in these systems. I think that would be interesting, right? So now we have more like a institutional perspective focused on JPY, which is very interesting. But I would like to hear from you what you see, maybe also from a Australian perspective or other actors that you work with, and then the decentralized players. That would be interesting to share with the audience here.
I think also first, thank you, by the way, and amazing presentations. It's a testament to what BGIN is, like showing all these amazing presenters and intelligence in one area in a very tight room. So thank you again to both of you for presenting. I think to preface, we can look at the Australian market, but it's really we're working with borderless immutable technology. So it's neither here nor there. The regulation may guide the kind of use case within that environment, but generally the functionality is the most important piece because it is modular. You have to do plural use cases. It's neither here nor there. I think the first piece is looking at blockchain as an immune system. Blockchain as an immune system being that anything that's not natively born, generated, minted, burnt, exists, will only ever exist within that environment. And anything that's not part of that environment natively will have to be wrapped, transferred, or replicated in some way. That trust has to be suspended. It has to be suspended in some level. So when we think about CBCs and being a decentralized person and holding decentralized values and working on decentralized projects, I'm actually pro CBC because it's quite early. It's a lot of lateral movement. But what the CBC does offer as an idea is that it's now native. It's actually now in a native blockchain environment. We don't have to be using trust accounts, banks that potentially may fail. We actually now have a direct line for the whole decentralized ecosystem. So as long as these market and projects that are being developed have a level of non-cartel-like behavior, because obviously when we say 3 private banks are coming together to make one coin together, and then the question is around issuance, it looks very much like the Venetian model. Where you had patrons to these banks to issue on behalf of, let's say, the central bank, but that led to cartel behavior that ended up leading to obviously a distrust from the public. So how can you maintain trust, maintain value, and then continue that transparency between issuance through to usage, through to, let's say, deprecation of the technology. So that's why I'm very pro CBC reserve stablecoins, because I don't have to rely on, let's say, am I holding this stable asset? Will there be a bank run that loses 13 points on it? will my loans in Aave all of a sudden just be called because I didn't kind of pay my risk because I was dealing with, you naturally believe a stable asset. So I guess the inflection point is just bringing this fiat technology, this like off-chain technology on chain to make it easier to actually use this technology finally.
Just to add to that, and I guess the point I found quite interesting in Ken-san's presentation at the end there is that this wallet can have sort of multiple access points and types of money. And there are different types of money. We have sort of sound money and the money that you want to save and hold on to, and it's a store of value over time. But we also have credit, and people are more willing to spend credit. And then in an even lower level of that, you have bonus points. And like that's how it's really beneficial to society to have those sort of different scaled options, right? Because like I'm more happy to spend my bonus points, and that then creates sort of economic sort of movement of money, liquidity, quick, faster, like faster movement of money, and in a sort of a Keynesian economic sense, that's what we want. We want like highly liquid, multiple movements of money to create economic output. But then, of course, we then get to the Bitcoin example, where we actually are more interested in storing value over time, because we can't be spending the future generations' money all the time. Like the debt situation in the world right now is actually, it's quite scary for future generations, because we're just spending other people's money that haven't even been born yet. So I think that's actually the point that I really wanted to touch on in that presentation, is that part of the benefit of blockchain and tokenization in general is we can actually create these multiple different types of monies and then provide people access to all of them. And then, of course, I think it's quite important that the merchant does have some sort of choice as to what type of money they're interested in accepting. And then the user has a choice as to what type of money they're sort of providing for whatever good or service they're purchasing.
New FX rates, like a new internal FX rates, really.
Yeah, like, I mean, if we can create standards around that, then a borderless technology will create more economic movement between nation states, which those connections can hopefully, like at one point in the future, facilitate sort of better and more trusted relationships geopolitically. But that's a long-term goal.
Okay, so that's very interesting. So I just make one remark. Of course, it would be awesome to have a wallet where in the future we as consumers can buy investment grade like credit instruments right then and there, right? Imagine how much liquidity we can generate through this means of securitization that would then be available to the individual client, right? So that would be great. But that's probably another story. What I'd like to, so now since we're on this institutional track, let's stay on this institutional track. And I will make one provocative statement, and then let's see what the group here says to it. So I like this idea of a digital bank run. In the context of CBDCs and also commercial bank money that lives digitally, I have always thought that it's actually also a problem of balance sheet expansion for these institutions, right? So both for central banks as well as for other banks. So imagine a world where some state actors will actually issue digital, backed money. Let's assume it's CBDC, but we are not quite sure. And depending on the quality of that state actor, people may choose to use that or some other form of payment, continue to use other forms of payment. But then let's assume that we have more trusted state actors and more trusted commercial banks starting to issue these digital, payment instruments. And suddenly, theoretically, the entire world could just go to a more trustworthy actor. And that would mean dramatic expansion of the balance sheet for this actor, right? So I'll take some easy places. Like imagine you have to choose between a digital one and a digitally issued Swedish, central bank currency. I would assume that probably most people would pick the Swedish central bank currency if they have a choice over a digital, Chinese. So this could be the same case for, commercial institutions that launch such instruments, right? And suddenly you pick a AAA bank, over some fledgling bank, even though, they're both maybe sound, right? And that creates huge problems. So when you talk to your clients, or to your members, Yamaoka-san, and let's start with Yamaoka-san again, right? When you talked about the participants in your system that think deeply, how concerned are they about balance sheet expansion?
Okay, yeah, that's a very good question. And our central bank can remind of the some sort of the narrow banking debate in the 1980s, raised by Professor James Tobin. And actually, at that period, narrow bank was proposed to sort of reduce the banking crisis at that period. Because if the currency is issued only by the entity with fully, safe asset, 100% safe asset, we can, reduce the banking crisis or liquidity crisis. That's a basic, argument. But in a real world, narrow banking did not emerge because it's quite difficult for the banking entity to continue the businesses by issuing currency with fully backed up, 100% backed up currencies, because banks need some sort of lending businesses in order to maintain their own operations. They can raise the benefit by operating the commercial banking services and the payment services all together at the same time. So the question is how to manage the market-based economy with the market-based asset allocation or resource allocation while providing the efficient payment services. And as you mentioned that actually the digital bank run is as a matter of degree. For example, even though the CBDC is not issued, still in the banking crisis, there would be a fund shift from riskier banks to safer banks always. So it's the matter of degree. But at the same time, as you mentioned, if the most trustworthy central bank in the world issues the central bank digital currency to all over the world, this sort of the digital bank run would be accelerated. In case of the crisis, all the deposit would move to those one single entity, one single issuer of the digital currency. So what will happen in the market-based resource allocation? Will the world go to the very centralized decision-making economy or not? This is a fundamental question. So in my sense, at this juncture, in order to maintain the market-based resource allocation at the same time, I think that to use the commercial banking system is most feasible way to strike the appropriate balance between them. This is my current idea. Thank you very much.
Oh, very interesting. Ken, how are your clients? That. And your research collaborators think about this problem between balance sheet expansion and maintaining liquidity, and then in the plumbing.
Yeah, your kind of suggested example, like a Swiss francs CBDC, is the very good one to explain the reason why ECB would like to put a limit on the maximum holdings on their wallet, say 300,000 euros, for example, since they don't want to have the Eurozone's resident to be kind of go out to the Eurozone, or in other on the other side, some emerging nations resident may want to use the euro as the settlement asset for their day-to-day payment. And not only the euro, but imagine that most of the blockchain innovation makes the kind of instrument that was only accessible to the institutions to enable to be used by the public on the retail side on the small amount. So thinking about not only the CBDC, but the AAA grade banks, the liability to be used on the cross-border by everybody. Like I imagine that euro dollar to be used to any resident in the euro area. That's kind of the kind of scary scenario. So that is why there's a notion of the cap, but notion of the cap on the world is not universal at the moment. Universal ECB to talk about, but some other jurisdictions not talk about it. But we may want to discuss about the kind of such like risk-based scenarios. At the moment, we can carry cash up to the 10,000 US dollar equivalent on the paper note to some other jurisdictions, and they exchange that paper note to the local currency. That's what we can do with the central bank's liability, or even the commercial bank liability in the Hong Kong dollars case. But what if you can? Imagine what if you can do in the digital space? So perhaps it's not the on and off, but the kind of risk-based.
Okay, and yeah, I would be interested in maybe you can the gentleman in the conference was always Joe and Mitchell. Maybe you can elaborate now that we have a very institutional perspective. How do some of the protocols or projects, right, that you work with, how do they think about balance sheet expansion and the virtual RON, so to speak, on their protocol?
Yeah, it's quite an interesting question, right? Because you build these decentralized protocols, and the economic sort of theory behind it is written at the start, and then you have to go through deliberative processes in order to make any of those changes. So it's almost like the game theory is known by all participants, and the variables. Of course, there are variables, and however, it creates almost like a level playing field for all of the actors. Whereas in the sort of institutional case, and I would definitely echo the concerns of having centralization around central bank money globally, because it almost like it would be too good to be true for a little while until it all collapses. And traditionally, our economies always go through boom and bust, and mitigating the size of the bust, I think, should be a priority for us here. So I guess that's part of the benefit of these multiple protocols sort of spinning up in a way, is that we are able to do micro experiments. That's one thing that I found quite interesting with the emergence of stablecoins, is that many of the stablecoins in the early days that were trying to do algorithmic stablecoin based projects, a lot of them failed within the first few weeks. And then there was, of course, Terra Luna, which was a little bit longer. But the reason that Terra Luna survived so long is they had so much more capital to feed into the system, right? So can we draw analogies here between the central bank currency and so one of the original algorithmic stablecoins, Amplefor, it ran through and I think it lasted around 4 months. And then the code was forked and it turned into Basis Cash, and then the code was forked again and it turned into Terra Luna. So these were multiple experiments which were run through, and we learned so much in the decentralized economy. And Terra Luna collapsed within a week. A lot of these sort of behind more institutional closed doors collapses, they're multiple year processes. because there are checks and balances in place. So I guess that's the major learning that I'd share with the group here, and the difference between the two.
For myself, I think people should split up how you have like a protocol and an application, and most things can be split from that. The business can be split up in the way you look at a protocol and application, and protocol. So generally, like pre-Web3, it was you start with an application, the idea of something that was like a use case, and then you put the protocol to kind of fit that use case. Whereas in the case of Web3, we built a very kind of broad, Turing-complete protocol, and then we have application that can be supported within that environment, so they can kind of stay on one track. And the one track piece is very important because when we look at tokenized assets, we're actually moving from a paper-based agreement certification or through digital sign certification through to blockchain proof blockchain proof and cryptographically signed certifications. It means that all that data that everyone has is on the same landfill. The copy machine that you have due to the kilometers you ran in that morning. When you have the same standardized data, you can do far more. It's far more usable. So when we talk about the expansion of a balance sheet, we can actually have, let's say a protocol may have limitations on the applications above. They cannot expand between a certain point in comparison to the rest of the market. You can have certain, MPC technology to ensure that no one actually shares, discloses their balance sheet per se, because obviously that might be private information through a private company, or if it's a public company, it wouldn't really matter anyways. Those who are private, you can kind of share. They're still they're still within that kind of balance, and if they're not, then maybe there should be an investigation and questions played in that place. So it's this technology is modular and functional, so that you can avoid those in the future by having parameters. Because right now we're dealing with a lot of unstandardized data in separate databases with solid teams. It is the hot pot for issues when it comes to a global economy of complex people. So we're trying to bring it onto one playing field, similar kind of data sets and ways to keep it private and equally useful. And that's what's most exciting. So we don't have less bank runs because we have more structure in place. Because the worst thing that I've seen with bank runs is that it's now a commonality. We shrug now. It's becoming a meme. It's like the fact that when 2008 happened and everyone is terrible things are going on globally, and now we're joking about it. We're laughing about the fact that $3 billion got wiped off. We joke about a certain bank that got bought out by another bank. And it's like, this is ridiculous. This is ludicrous. This is billions and billions of dollars of might not be my money all the time, but will be your money, someone else's money. So we need to reduce that issue by becoming on the same playing field of data, so we can actually be more interactable and cross-compatible. And one last point of that is one of the papers we proposed, Soulbis tokens, was plural polycentric Soulbis tokens to enable CBC centralized finance compatibility. And that's meant to be so people can actually have attestations of themselves and what they've done to bridge like reputation economics apply reputation economics into capital value economics. Because end of the day, it's about people that matter. Money moves because people chose to move it. And that's what most important.
And just one final point, really quickly, I think our fingers on the pulse here. A lot of our sort of more fintechy payment-based companies that we speak to, they are all making moves into stored value-based plays to expand balance sheets and allow for tokenization to sort of be liquidity traps, especially with the sort of the learnings that we had in DeFi and the benefits that incentive-based protocols can have to user acquisition. Fintechs are learning this.
That's an interesting point. You're still there? Yeah. All right. I saw you broke up at the end. Okay. So, all right. There's a lot of points brought up. So, you could also think, before we go to the next topic, you could also think of what's going on in the banking sector right now. I mean, obviously, there's a lot of there's a lot of consolidation in the banking sector, so there's centralization happening. But in decentralized environments, right, also in these DeFi environments, there also is quite a bit of centralization happening, which is a problem, right? So, because it makes the system inherently less stable, it's very clear. So, so I take the point in the real world, made by both the first two speakers here on the question is, the stability and the ability to provide liquidity in the real world, in the plumbing system, so to speak, right? This remains critical regardless of whether these are digital asset, whether the payments is completely digitized in a blockchain-based environment, or semi-digitized in the traditional environment where you may still have the option of cash, which in many economies is truly no option anymore, right? So it's very difficult to use cash. So de facto, it's already digital as well, right? So so why don't we spend the last few minutes before we end here on this question of what is now still missing? So in this infrastructure, so we've laid out there's deep thinking about CBDC, there's deep thinking about commercial bank money issued, there is clearly thinking by Yamaoka-san and all the participants in his system, obviously, how you can truly have some aspect of decentralization while still have like one unit of account, that is very interesting. So what else is missing, right? What else are we missing? So we have some payment channels, we could say. We have some primitives that have been established in DeFi environments. We have some DVP POCs that happened, right? I have to say, I'm not as familiar with DVP experiments in Asia. I'm very familiar with what the ECB has done and the Bank of France, and the Swiss National Bank and the BIS. So what else is missing, right? So what's next? So okay, so we agree, we need decentralized commercial bank money. We have some CBDC with limits. So, but what else are we not talking about that you think needs to be talked about, in this context? Maybe Yamaoka-san.
Yeah, the first challenging area is the data governance. Both the cash or banknote is a very decentralized structure, because even the issuer central bank doesn't know who owns the banknote or who owns the cash. So central bank does not touch the information or data attached to the banknote transaction or movements of banknote or cash. But in terms of CBDC, if the CBDC platform was formed, perhaps the information data attached to the CBDC transaction will gather to the central banks. So how we should govern the data or information collected through the CBDC? This would be a very important issue. Who should govern the information data attached to the payment or settlement? This would be a very important issue we will need to handle in the near future. And maybe second issue, and the second issue will be the coexistence with the market mechanisms. For example, if CBDC linked with each other to facilitate the cross-border transaction or cross-border remittances, of course, that will be a fascinating idea. But at the same time, the current exchange rate will be formulated through the market mechanism. It is based on the fact that each commercial bank has its own position and make a transaction with other bank. That's why market-based exchange rate is formed at this juncture. So if the CBDC linkage is realized, how the market-based exchange rate will be formed? This will be another important issue. So we need to also think about the mechanism to have the market mechanism and the efficient payment or settlement coexist in the near future. This is also a very important topic. Thank you very much.
Oh, very interesting. Yeah, just think about what is going on with de-dollarization and why de-dollarization is happening. That's exactly why, right? People do not want to submit to certain centralized players, that would rule their world, right? So Ken, how are you? That's good. So Ken, what areas do you think need to be addressed that are not yet addressed?
Yeah, I fully support Yamaoka-san's comment on the data governance and coexisting with the market mechanism. And through the introduction, I mentioned the one of the BGIN's paper, proposal of principles of the DeFi and disclosure and regulation. One of the suggestions of proposal described in the paper from Tomo is that the establishment of the disclosure framework or disclosure platform, because we can learn from the DeFi a lot, as you mentioned, and the Swiss banks or MAS's joint experiments. They learn from the DEX mechanism to be implemented in the exchange of the CDBC cross-border. Well, perhaps there's another issue from the market mechanisms, certainly. But however, we don't know what the DeFi is or what's happening in the DeFi world in the real time and very kind of in the credible channel. There's no single entity or let's say centralized or like a platform or a social platform that DeFi projects can comfortably disclose such statistical information like trade volume, a price, and on the other hand, there are no mechanisms to proliferate the real world transaction like FX rates to their systems as well, all right, through the Oracle or something like that. So perhaps one of the key challenges in the industry could be the establishment of such platform to disclose what's happening in the DeFi to be understood not only the engineering community but also the general public as well as the regulators as to be used as a common understanding. Certainly, we know there are some market data or probability that create kind of research and made some data in the market. However, it is not like let's say public or it is not, let's say, official statistics. So somewhat like official things could be utilized. And then we can discuss the next step, like establishing some code of conduct type of things, and also comply or explain type of the governance. That prior to that, we have some such kind of the disclosure platform. Thank you.
Thank you. Thank you, Akana. Yeah. What else is missing, gentlemen?
I love those answers. Like data governance by itself is a great way to explain the problem, which is that how can we trust the information? Again, blockchain immune system, very hard to bring things into there. Once it's in there, you have to make sure it's true, authentic and honest and transparent. My personal belief is that we need IoT that has better blockchain firmware, good blockchain compatible firmware. Because when we have any kind of real-time data processed in the real world, how can we capture it in a method that's transparent, honest, in a way that provides a level of consensus to then be ramped on chain as useful data. Right now, we have articles like Chainlink, for instance, that are obviously all ramping data already. But when you have so much complex information globally with disparate databases and systems, even means to collect the data, everything from paper through to digital capture and machine learning nowadays captures, it's very, very separate. So I do believe we need better IoT devices with better with blockchain compatible functionality, so we can capture everything from the data entry that the analysts had at the JP Morgan of the world, the more researchers of the world, right, all the way through to the farmer who's capturing for insurance purposes. It's just like that raw data capture is most important, because then again, once it's in that blockchain layer, it's native now, it's now safe, it's transparent. We now can use it for complex products. We can use it for complex insurance products, complex credit products, complex combined insurance credit products. That's the future that we're looking at right here, and I think is one of the biggest deficiencies we have, and won't be possible unless we create that great hardware and firmware. And the last piece is reputation, because any market, any economy that's not used reputation always leads to political governance systems, monopolistic competitive behavior, and equally disenfranchised and marginalized communities of the world. So, when you start embedding that reputation, start creating hybrid structures of reputation and capital value, so people can become accountable. And really, that's what it comes down to. So, you have governance and all those pieces. It's accountability of the person, accountability of the identity, accountability of the data, accountability of how we got the data, accountability of the money. Is the money actually sound now? It's all about accountability. Because once something goes wrong, who can you point towards and what exactly can you fix? Because now it's code, open source, you can see it, you can actually apply our thought. and reason how to fix that, as we did with these other projects.
I think just to add there really, really quickly, one of the solutions we can think about for this receiving official data or being able to create an official data platform is we need to create a reputation layer for the oracles. So the oracles of which are feeding the data into these sort of blockchain-based networks and systems, and the smart contracts rely on to get the FX rates from every single different bank who's publishing their buy and sell bids. It's about building reputation on top of these oracles, because not all oracles are going to be publishing the correct data. They're not all made equal. However, it's the decentralization and the aggregation of this sort of vast network of oracles which can get us to the closest number to the real number. We're never going to get the real number, but if we have reputation on top of these oracles, we can get closer to the real number by adding weight to the sort of oracles published. If that makes sense.
Great, very good. We're almost at time, but yeah, actually, I would like to give back the time, to the chair of the event. I think this was great. I'm sorry because I have like an urgent family matter I need to attend. I think, but I think we explored really many interesting topics. I'm glad that the panelists, got us onto these really critical areas of infrastructure and players and governance. So I think we touched on many really relevant and critical points. So with that, I think I'd like to hand back to Matsuo-san or whoever's in the technical driver's seat. And I appreciate the time of the panelists and look forward to maybe reconnecting physically. I will in Asia traveling in the fall, so that would be great. It sounds really interesting what you're all working on.
Great, thank you.
Thank you very much.
Questions for anybody else after?
Oh yeah, maybe questions, but I need to leave, so if that's okay.
Is there any question? Yeah. If no, that's so. Thank you, for your sharing.
Sure.
Okay, one question.
Don't use come here.
This.
Quick question. How do you believe the CBDCs might affect the monetary policies or fiscal policies?
Allude to the comments first and then the consultants answer after. Ken, ready?
Yeah, could I? Yeah. Yes, if you want to, yeah, first, yeah. Could I? Yeah, okay. Yeah. I was working as a market chief of the market department of the Bank of Japan, and we talked a lot about this issue, the impact of CBDC on the monetary policy. And yes, in general, according to general economic theory, if the payment instrument are denominated by the national currency unit, that's like a Japanese yen or US dollar, there's no impact on the monetary policy. For example, if we look up the situation of the Sweden, in Sweden, only 1.3% is how to say the cash to GDP ratio. The people rarely use cash, but still, the Swedish monetary policy is quite effective. And if the CBDC is issued, there's actually the complicated situation. And some academia argue that we can impose a negative interest rate on the CBDC. This is a quite interesting topic from the academic point of view. But practically, it's quite difficult. So among the central bank circles, there's no discussion about imposing the negative interest rate, because if we impose a negative interest rate on CBDC, people may prefer cash rather than CBDC. So it would become meaningless to issue CBDC. That is a quite tough situation. And on the other hand, if we impose the positive interest rate on CBDC, the CBDC would invade the bank deposit. So there may be huge this intermediation from banking sector to CBDC. So this is also problematic. So in a practical point of view, it's quite difficult to impose the interest rate on CBDC. So that's why I think that issuance of CBDC may not impose a huge impact on the monetary policy itself. Of course, at the same time, if the crypto asset not denominated by the national currency unit, it's also a problematic situation for the central bank. So there's a debate that the central bank should issue the CBDC in order to combat with the crypto asset. But this is the debate in the future. So at this juncture, central bankers do not have to worry about the CBDC itself in terms of the impact on the monetary theory. This is monetary policy. I think this is the current general view among the central bankers. Thank you very much.
Yeah, I just wanted to touch on the one of the exceptions on the currency side. If the current stable coin primarily backed by the fixed income securities, and what we observed in the Silicon Valley Bank's crisis is the commercial bank asset. So if the issuer may have access to the wholesale CBDC if issued, and if the such stablecoin can be distributed outside of its original jurisdiction, there will be some issues. But if it is only the domestic, yeah, no issues. That's it.
It's so early. When people think about how much policy, we're looking at functional money, say multi-purpose money, which means that it could have multiple impacts to the economy. You can best believe that central bank, their whole objective and mandate is ensuring monetary policy is healthy and safe, which means that it won't be, you can take from a very, very good developed nations, that are conservative developed nations, be very, very, very critical about every little decision you make, about what kind of functionality, smart contract functionality, how it interact with other technology, because one small step could be cash free. So I think how it impacts monetary policy is meant to be monetary policy. It's more so about how can it make plural kind of complex use cases beyond monetary policy, we still delivering its objectives over time. But if you look at any kind of CBC project globally, we're still pretty early in terms of agent development, even production and issuance. It's been a long time to really see it. But when you do see it, it will be because of several hundreds of developers, really coming together, hundreds of consultations really coming together, make one decision. So it's very calm, quiet, pragmatic, and will take time. And then we'll be able to have a better idea of these, let's say, posting new, introducing new functions. What I would say though is always watch in terms of legislation. Consultants are very independent. We have to watch all legislation. Watch the legislation of any of the government your country or part of, and to see if there's any new laws appended to the objectives or mandates of the central bank. Because if you see additions of, let's say, monitoring cash flow and funds, you saw with New Zealand. New Zealand added a new legislation, popular legislation last year, 2 years ago, where it allowed them to monitor cash flow, and please go check it out yourself. And then we found that in the paper around the CBDC was around the essentially could not trust, and so paraphrasing, and please do your own research on it as well. They could not trust the user to make their end users make their own decision when it comes to kind of product of crypto. That became a bit scary. So I would look also for the overreach of their kind of powers before you look at what CBDC does first. Because it has to legislation, and then you have to have the total use case and smart contract functionality there. Until then, just sitting monetary policy.
Thank you so much.
Okay. Other question? No, let's ask for this just on this discussion. Thank you very much for that joining. And then we have lunch. So please bring your that venue. And
Thank you.
Thank you very much. And we will have the final session from 2 p.m. Thank you very much.
Great. Thank you. Thank you all.